Hello and welcome to Zak's Traders Cafe. Today I'm joined by Geoff Hsu, who is Portfolio Manager at the Biotech Growth Trust. How are you today, Geoffrey?
Fine, thank you.
Right, the London stock market historically has had a rather difficult relationship with the biotech sector. Is one of the main plus points of your company that you're mitigating risk?
Sure. So biotech can be a very volatile sector. The biotech stocks trade a lot on idiosyncratic risk and the fate of their, generally speaking, primary lead drug. And so I do think it is prudent to have a healthcare specialist who is accustomed to looking at these situations to develop a diversified portfolio for investors to get exposure to this very exciting sector.
And one of the other issues that you can have in the London stock market with investment companies is that they tend to be judged not by their best investment, but by their worst. Is that something you're familiar with?
I'm not actually.
Right. Okay. But I mean, is that something that how would somebody value your company if there is such a diverse set of investments in there?
Sure. So most of our investments are actually publicly traded stocks in the United States, in Europe. We have some exposure to China as well. And I think with diversification, you can get great exposure to a number of great innovative technologies in the biotech sector through investing in this vehicle. There are very few UK-based biotech companies. So the purpose of this trust is really to allow investors in the UK to get exposure to this sector because there are very few options available to them as single stocks in the UK London Stock Exchange.
Is liquidity an issue for you?
It can be. So we do have some exposure to small cap stocks, and we are very careful and attuned to the liquidity profile of those names. But clearly, as you go down in market cap, liquidity can be an issue for individual names.
Are you holding for a big liquidity event? So you might, if you like something, you buy it when it's got a 10 million market cap and you're hoping that it'll be 100 million, then you can get out easily.
Sure. So the types of stocks that we focus on are stocks where there is some sort of value inflection point over the next 12 to 18 months. That could be an FDA approval. That could be a phase 3 clinical trial result. And you're absolutely right that when those events happen, the liquidity of those stocks goes up quite a bit. And so, depending on what the stock price is, we could either sell the stock on that event or buy more, even if we feel like the valuation justifies it.
Well, final slightly negative question is that we're speaking about the London market. The London market seems to be rather stingy in terms of valuing compared to the US market, or that's at least the impression that we get. Is that the case, and does that give you more value opportunities on this side of the Atlantic, for instance?
So we're really looking for companies that have fundamentally good technologies or products. That's really going to drive our investment decision. For better or worse, in the United Kingdom market, there are fewer companies that fit that profile, that investment profile. So, most of the innovation in this sector is really occurring in the United States. Is there a systematic valuation discount for companies based in London? Not necessarily. If they still have a good drug and the quality is great and the management is good, they can still get a nice valuation. But I would say there are fewer quality companies in biotech in the UK market versus the US market.
And are there any sort of compelling things that you see or you're looking for that mean, like the management or like the addressable market or the level of innovation? Are there is there a sort of 5 bullet points that you always look for?
Sure, those are all characteristics that we look for in identifying a good investment. At core, though, it's really about, does this biotech company have a drug in development that is ultimately going to get approved, that is going to deliver a significant clinical benefit for patients? And then beyond that, does it have a commercial potential to make the investment worthwhile in order to develop this drug? So we're looking at all of those characteristics. Management and the ability to execute on drug development is obviously a very important part of that as well. But at core, it's really about does the drug that the company is developing, does the drug work, and does it have a good risk-benefit profile in terms of efficacy versus safety?
Is capex or the cost of research a factor as well? Because sometimes you can have a company that says it's got cure for cancer, but it might cost like £1 billion to develop it. Is it sort of chicken and egg situation?
Absolutely. So most of these biotech companies, prior to launching their first product, need to invest quite a bit in clinical trials, in research and development, and so they are actually money losing prior to launching their first product. So they do need to tap the financial markets on a regular basis to get financing. They usually do that through regular equity offerings, and we definitely look at how much cash they need to raise in order to take their drug candidate through the clinical trial process.
Well, I'm going to ask the best question last, I hope. I hope it's the best question. What is the hottest area in biotech at the moment?
So there are lots of hot areas in biotech right now. I would say oncology, basically the development of treatments for cancer, is the #1 area of drug development right now, given the significant unmet medical need there. But there are lots of other technologies, RNA-based technologies, gene therapies, cell therapies, et cetera, that are showing good results in human clinical studies. So there's quite a lot of innovation going on across the spectrum of biotechnology.
And has AI helped speed up progress in biotech?
So all of the pharmaceutical and biotech companies are employing artificial intelligence to improve their drug discovery processes. And yes, we do expect that to result in hopefully faster and more efficient drug development.
And I'm sort of asked you whether I can ask this question, but I'll do it anyway. Do you have any favorites at the moment? Any favorite companies, portfolio companies that you think, oh, this is a real winner? And can you reveal that?
So unfortunately, our compliance department is pretty strict about me making stock picks, or looking stock picks. So unfortunately, I'm not able to answer that question.
Right. So you have a portfolio which you update these mystery. Shareholders, they're fully aware of what you've got.
So we do have a monthly fact sheet that discloses our top 10 positions every month. And then, of course, with regular investor presentations at the annual general meeting, for instance, or other occasions, we will have an investor webinar. At those occasions, we will typically disclose our portfolio as well. And of course, in the semi-annual report and the annual report, the full portfolio is disclosed for investors.
So investors are fully sort of informed at any time.
Yes, to the extent that it's they're reasonably informed at any given time of what's in the portfolio.
Yeah, and I suppose to sort of follow on from my question that you couldn't answer, presumably if you were answering or trying to answer it, would be like trying to choose a favorite child. I mean, obviously, everything you bought is something that you believe in.
Absolutely. There's exciting developments and innovation going on across the whole industry, across therapeutic areas, across technologies. It's really a golden age for innovation right now in biotech.
Geoff Hsu, Portfolio Manager at the Biotech Growth Trust. Thank you very much indeed.
Thanks so much, Zach.